Hello and welcome to another edition of VAT Update from Tax Essentials for Advisors. I'm Ed Thompson. And a little theme this week is public electronic vehicle charging points. In HMRC news, we've got some updated guidance on the domestic reverse charge about these charging points. And we've also got a VAT case about whether the 5% VAT rate can apply to electricity supplied at these public charging points. In addition, we've got a case about single and multiple suppliers in the farming sector and a tax tip about delaying tax points by issuing proforma invoices rather than VAT invoices. So we'll start with the update to HMRC's guidance on the domestic reverse charge. What is the domestic reverse charge? Well, at its heart, it's meant to be an anti-fraud measure. It shifts that obligation to account for VAT from the supplier to the customer. And the point of this is to reduce the risk that the supplier charges VAT, collects it, but disappears without ever paying the VAT that it owes to HMRC. The domestic reverse charge applies in various areas where HMRC thinks the supply chain is high risk. So, for example, it applies in relation to some subcontracted construction services. It also applies in relation to wholesale supplies of electricity between UK counterparties. HMRC has updated its guidance to make clear that it doesn't think that the domestic reverse charge extends to the supply of electricity at charging points for electric vehicles. Why? Because this isn't classed as a wholesale supply. Continuing our EV charging theme, let's take a look at a tribunal case on EV charging points. And there's potentially hundreds of millions on the line over this one, so it's a very important point of law. The question is whether, in principle at least, electricity supplied at EV charging points can qualify for the 5% reduced rate of VAT as a deemed domestic supply. Now, HMRC sought to deny the 5% rate with some quite restrictive interpretations of the legislation. But the first tier tribunal has disagreed with that and found that there was nothing to stop the relief from applying, provided that supplies to each customer weren't over a 1,000 kilowatt hour threshold over the course of a month. This opens the door for a lot of refund claims to be made, but it remains to be seen whether HMRC will further appeal, given how much money is at stake. It could even prompt a prospective change in the law. Our other case this week is about a farming partnership and one of our favourite VAT topics, single and multiple supplies. This partnership was providing what it described as a bed and breakfast service for livestock, and it argued that either it was making separate supplies of exempt land and zero-rated animal feed, or just one single composite supply of zero-rated animal feed. The tribunal, though, wasn't convinced, and it held there was a single composite supply, but it was a single supply of standard-rated animal rearing and management. And finally, our tax tip this week is all about pro forma VAT invoices. Now, as you may be aware, issuing a VAT invoice can sometimes trigger a tax point for VAT. Take an example, I'm providing some services on a retainer and they meet the definition of continuously supplied services. Now, the tax point for continuously supplied services is the earlier of the receipt of payment or the issue of a VAT invoice. By issuing a pro forma invoice instead of a VAT invoice, I can request payment from my customer without immediately triggering a tax point and the need to account for VAT to HMRC. And that can be extremely helpful where cash flow is an issue. Be careful though, make sure that your pro forma invoice doesn't accidentally meet the conditions of a VAT invoice. So for example, you could exclude the VAT number. And also, ensure that the document is very clearly described and ideally endorsed with a narrative like, "This is not a VAT invoice." Finally, don't forget to issue that VAT invoice when payment does come in from the customer. That's all for this one. I look forward to our further update in a couple of weeks' time.
Thanks for that, Ed. As with all our updates and webinars, this was brought to you by Tax Essentials for Advisors. As well as our media content, our resource is packed with highly valuable materials, from topical articles and news flashes to our in-depth technical commentary via our memos. We also have a powerful AI assistant to save you valuable time with your tax research. For more information and to book a demonstration, visit the link shown here.